Hi, thanks for joining me again. We've been looking at the different principles involved in chart reading for quite some time now, and I thought that perhaps we should start putting it all together and looking at the chart as an unfolding story and putting it all into some sort of perspective. We're looking at the Bitcoin chart because it's shown some quite clear principles recently. It's sort of a popular chart at the moment anyway. So we can look at the Bitcoin chart this time, and we'll look at all different charts over a period of time. If this turns out to be popular or successful, you can let me know in the comments what you think. And we'll continue to regularly look at different charts and explain what's happening and why, or at least attempt to. You can see here that price accelerated higher, and then there was some testing, which we looked at the video on testing not long ago, and there was very little supply. This was probably some absorption going on here, just to make sure there was no supply causing an issue. And then price gapped higher. It gapped over the highs of this up bar, which was on pretty good volume. Now, generally, a market will gap for a reason. It can happen organically, but generally it happens for a reason. And the reason is usually the market professionals encouraging the retailers to hold on to their stock. They're using the greed emotion. And if they gap up like that and people are making a big profit, they're less likely to sell. And if they're less likely to sell, it's much more easy to mark the price up, and it creates even more demand. The market will generally gap up when it's breaking out and moving to a new level, or when the market would like to sell and create extra demand, because it really stands out and it gets people excited. And when they're excited, they generally tend to do irrational things. And one of them is continue buying a market that's about to sell. So it's generally on breakout or to sell. It can happen organically, but it's less likely. Now remember, if you look at down here, there's very high volume, a very high increase in volume on that bar, but it looks very narrow spread. That's the traded volume. The actual bar looks like this. That looks much more like what the bar really looks like. The gap is taken into consideration as well. And then the volume and the spread or range of the bar is about the same. You can see that the next bar was a test and very little supply was drawn out. So price continued higher because there's no selling pressure or very little, on a modest increase in volume, and then the market tested again. Now both these test bars actually closed as very slight up bars, but you can see that the majority of their trading was as a down bar, was below the previous close. And the market has tested, it's found very little supplies drawn out, very little selling pressure, and that's allowed price to close back up high, and in this case, just slightly as an up bar. But in both cases, it was really a test of the market for supply. Price continues higher. The mid-bar close is a little concern. Volume was good again. And you can see here, volumes are generally, down the bottom here, volumes are generally increasing. But when the market tests, supply is shown to be low. Now, this mid-bar close probably caused the market to test early the next day, and that would be this part of the trading. And if you look down the bottom here, volume was low, so I expect that the market found very little supply when it actually tested below the close of the previous bar, and that allowed it to accelerate higher and actually close above the previous high. And that's quite positive and strong. There's very little selling pressure in the market, and we'll just consider that the mid-bar close on this previous bar to be an anomaly at this point. The market continues higher on pretty strong volume. In fact, almost the strongest volume for some time. But spread has narrowed a little bit, which was a little bit of a concern. But you can only look for the response and see what happens, and the next bar accelerates higher on slightly lower volume. So once again, selling pressure is considered to be relatively low, albeit the close was a little bit off the highs. The next bar, however, has tried to continue higher by the looks and drawn out supply. Volume is still pretty high. If we look at how much volume there was, it's still 1, 2, 3, 4, 5. There's only 5 bars with higher volume, really, maybe 6 marginally. And I imagine prices traded something like it went up, it went all the way down, and then it closed like that. And I would suggest that with the mid-bar close on pretty good volume, that supply was coming in there. It's been questionable a couple of times previously. I imagine some supply has been drawn out. Now you'd mark where the supply came out. You could mark up there, but it's a very high, very long tail. I don't really like marking really long tails. So I would probably mark the slightly higher volume last up bar. You can adjust or fine tune the actual horizontal line marking where you estimate resistance or selling pressure is. And we can see here, because we've got it in front of us, that there was 2 closes here together, and you can see here that the market's come up to it and respected that line. So while you probably would have marked here to start with, you would have fine-tuned that line back down to the close at some point in the future when you realise that that's actually showing you where the market is respecting. The other giveaway, because I marked this line pretty much straight away, was this was the juncture where price broke down on high volume. You can see the next bar actually price moved much lower, and it began here. This is where a lot of the volume would have been, so I pretty much marked that spot because I like these little areas just like this where there's a juncture and price breaks down below it, especially when it breaks down below the low of the previous bar like that. So anyway, price moved much lower very sharply for a single day's movement, and it was very high volume, so I would definitely mark the low of that bar. I would mark the low of that bar showing where support was, and you can probably consider that price moved all the way down like that and then up, and this shows where support came in, and you would say support is up to this level at this point in time. Now the next bar is a little bit confusing. It's difficult to read exactly what's going on in there. It's hard to know whether price tested first and then moved higher to close poorly below halfway on the bar. So you would call that questionable. You probably drew out a little bit of supply. There was probably some sort of balance between supply and demand that made it hard or difficult to know what was exactly going on. So we watched for the response, and the response saw price move below the previous close and probably draw out very little supply. So in response, it moved up higher because there was very little selling pressure in the market. And volume down here was quite low, actually. It was below average. The next bar saw price also move up on low volume, but it never issued any serious sort of challenge to the resistance up in this area. It just moved up to the line and closed pretty much right on it. So there was no real intent to break through that previous resistance, and instead price moved below the previous close the next bar and on an increase of volume. I would suggest that the market may be wanting at this stage to come back and test the strength of the support that came in down here. It happens about 50% of the time that the market will come back and retest a level that's previously drawn out support or resistance. You can see the prices come up and tested this level up here, and prices come back down, we can see subsequently. But let's read the bars as they go. Price closed below the previous bar's low, remembering there's a little gap here, and the previous bar's low was the bar before that close. And then in response, the next bar was up. There must have been a little bit of support in here, but take note of this. This is how much spread there was on this bar with this much volume. And then the bar in response has even more volume, but the spread has narrowed and it's closed as an up bar. The only way this bar could have a narrower spread was if lots of supply was coming in. If all the volume down here was buying, you would expect that this bar would have been much stronger, probably close above the previous bar's high, like that. It had higher volume, and volume and spread generally go hand in hand unless there's an anomaly, and you want to look for those anomalies because they will tell you what's going on. But that bar didn't close like that. Instead, it closed with a narrower spread, and the close was in the middle. This was more supply being drawn out, and in response, you can see price attempted to recover. It dipped below that line, recovered, sat right on it again, but then the next day it broke down. It broke down and it tested the lows of the previous support. I would say the next bar is a buying bar. Prices dipped below like this, found that the support was strong, and then closed back up like that. And then the next bar is indecision. You can see there was probably a little bit of testing in the bottom here, but there was no demand in the top of the bar. And that told you that the market would probably like to test to make sure that there really was no supply in the market and price could go higher. And there was your test, and volume was found to be below average. Now the next bar looks sort of like a shakeout, and it did draw out strong supply. Now, here's a little principle you want to follow. It's not always the case. Test plus shakeout equals breakout. Doesn't always work. It does work a lot in the futures markets. You'll see a test, you'll follow it with a shakeout. There might be a little intraday test to follow. And if you look, there really was a little test below the close of the previous bar, and volume was low. And that's probably why price actually closed higher in the end. And there's a little junction you want to be looking at. Two closes show an important level, and then a nice little test, shakeout, test that finishes up at that level. And then in response, price is broken out above this little level. You can see if we mark the trend line on that, and price is then broken out above all those levels on an increase in volume. That's what happened last night, which was Friday night, the 29th. I expect price will go up and issue a decent challenge to this line now. There's been a bit of work done. This is the consolidation of the previous rise, and if it's successful, and it's not guaranteed to be successful, but it looks fairly positive at the moment, I expect price will issue a challenge to that $40,000 level probably next week, and then we'll see how strong the market really is, whether it can continue from there, probably with a bit of testing. or whether price will fail and more supply will be drawn out. And just on the test plus shakeout equals breakout, sometimes you'll see it be shakeout plus test equals breakout, but it rhymes better that way. And funnily enough, you'll often see it more often that way, and then an intraday test like this to follow. Now we'll just remove all of that scribble and just look here at the last bar. We'll put back where the support and resistance appear to be and remark in that period within the trading range, within the consolidation zone. Now, the last bar, which is a breakout above the previous trading, all the previous trading is here, all the previous recent trading is here, and last night's bar broke out clearly above that on an increase in volume. But you'll notice that the volume was nowhere near as high as on this shakeout type bar. And the shakeout bar was actually reasonably narrow. You might say that's an average bar on very high volume. Price accelerated higher last night, on Friday night, the 29th, on an increase in volume over the previous bar, but only slightly above average volume, because most of the sellers had been removed from the market on this shakeout bar. This shakeout bar was a bit of an anomaly. It had a narrower spread than you might expect for that amount of volume, and the next bar tested and then closed higher. So in response, we saw the market move slightly higher, and that's telling you that there really was buying in this bar if you weren't sure to begin with. And then the response from that was a breakout above the most recent trading on an increase in volume and slightly above average volume, but not excessive volume. That's just what you want to see. It's telling you that the majority of selling pressure had been removed from the market, probably by the shakeout bar and the following little mini test. And that allowed price to push higher with relative ease on good volume, but not excessive volume, which is just about perfect. Okay, thanks for your time today. See ya.